The most likely outcome is that the economy will move forward toward a soft landing. Janet Yellen, 2007. Let us gaze into our chaotic present-day financial market plumbing to see if this current day's soft landing narrative will again turn out to be mere fantasy, shifting into global financial crises. Having lifted interest rates off their 5,000-year low levels, the Federal Reserve and central banks around the world have produced one of the fastest interest rate climbs in recorded history. This chart shows 10-year U.S. Treasury bond yields. The higher they go, the less valuable the older, lower interest rate versions become. And I'm not talking about a little loss here. Peak to trough, many 10-year and 30-year loans to the U.S. government are down by nearly negative 50% in current market value, those that were issued in the last 3 years. Interest rates were climbing so high and so fast this week, it led to many bond market analysts speculating that perhaps this week's screaming higher interest rates were a cause of Japan selling treasuries to intervene with its collapsing fiat yen value, which is about and threatening to surpass the key 150 yen to one fiat US dollar level. Others suggested it was China selling more US treasuries and perhaps instead using those proceeds to buy energy like natural gas, crude oil, and other precious commodities like silver bullion, which saw massive premium spikes paid in China this week as buyers bought the silver spot price dip, obviously. Perhaps screaming U.S. interest rates this week have something to do with the fact that the U.S. debt increased by over $310 billion this week alone, with the U.S. national debt now nearly $33.5 trillion. And these massive debt piling deficits are currently happening without an admitted recession yet. The national debt is now ballooning past GDP growth, and there's no sign of this trend slowing down anytime soon. To put some of the current long-duration U.S. bond market losses into context, since March 2020, the 10-year Treasury bonds have lost nearly negative 46%, and the 30-year bond has lost negative 53% in value. The U.S. bond market is many-fold larger than the U.S. stock market, but since the stock market has yet to begin its eventual coming cascade in real value terms, many normal investors in the world are unaware of how bad things are getting underneath. Here's a chart illustrating how this long-duration bond crash 2020s compares with the 2008 stock market crash in blue. Bank balance sheets are still stuffed to the gills with losing long-dated U.S. Treasuries, and that problem, while seemingly currently paused, is still waiting out there to be dealt with in full. This week, word got around that Barclays analysts believe the global bonds are doomed to keep falling in value only and unless slump in stocks revives the appeal of failing fixed income values. The S&P 500 closed this week just over 4,300, but it still has the look of a deflating bubble, again with a mere 7 tech stocks, keeping it still buoyant for now through this year. On a longer look divided by gold bullion, see us revisit and eventually surpass the 2011 low levels seen on this chart here. Also, a coming rollover in overpriced U.S. home values versus U.S. median incomes will likely be coming along simultaneously as well. Home prices in bullion are poised to return back towards and perhaps beyond their 2011 low levels, especially if you consider what happens if CNBC's Rick Santinelli's call this week, where he stated that early 1980s interest rate levels are coming for us toward the end of this decade and into the 2030s. Have a listen.
I personally always find anniversary dates very key, and I can't help thinking about September of 81 when we had the all-time high closing yield just shy of 16%. Now, this chart is really off scale. Remember, when you're doing these charts, you got to use logarithmic paper. This is just a rough gauge, but there's your near 16%, SEP in 81 for your anniversary date. And the whole point of this chart is that we have a lot of potential room to run to the upside. So if somebody asked me and held a gun to my head and said, listen, the worst case scenario, where Treasury rate's going to go 10-year, I'd say in the next 7 years, you should be able to see 13.5%, 14%. Yes. That if you want to know where inflation is taking the markets and why, just look at government spending. The vigilantes have new horses and they're riding, and I really do think that is the answer. We are spending too much. We are not learning to cut back. As a matter of fact, I think we're out of control as we approach a $2 trillion deficit, and this is the market's way to get Washington's attention.
That's always been the case, though, hasn't it, to some degree, Rick? So
why QE
13%?
QE changed everything.
Yeah. Right. So do you think that the Fed, whoever the Fed may be within the next 10 years, is actually going to allow a rate that is above 13%?
You can squeeze a water balloon 9 ways from Sunday, but eventually it pops out somewhere. They are running out of little tricks to pull out of their bag. And in my opinion, the quantitative easing removed many signals in the market that now it's trying to put back in place. And they could do as they wish. If they keep tinkering with this, the problem is we have too many large economies that are going to be in the same boat. And who's going to end up buying this paper?
Right.
So, Rick, let me ask you. So let's say rates just keep going up so much that they crush the economy, right? And so then do we start to see rates really come back, or do you see stagflation and
I think Guy hit part of it. In 1987, when we were in the pits, what we learned was that when equities get really ugly, you see the Treasury complex start to do better. I think the signals being distorted has changed that to some extent, and it's going to have to get much uglier to get the attention of the bond market. But I think that dynamic will come to the rescue, but it's going to come to the rescue late in the game.
Karen mentioned that we've had rates at these levels before, which I totally agree with. It's a rate of change thing, though. And think about 15 years of being conditioned liquidity, zero interest rates. People are not prepared, in my opinion, for what we've just seen over the last 18 months. Speak to that.
Oh, yeah. Not only are they not prepared, I think that when many look at the markets and they scratch their heads, they just don't understand that the Fed held the beach ball underwater for so long, basically a decade of zero that shouldn't have been at zero, that ultimately the force that this thing's popping out, I think, is justified.
If it pops to 13, if the trajectory is very steep, does that imply that the bounce back is going to be steep as well?
Absolutely. Absolutely. The 1/3 or 2/3 retracement on some of those GAN numbers should be every bit as aggressive. That's why I do think we're going to get a pause. Yeah. And I think we're going to consolidate here. But I urge people not to try to pick tops and yield. Let the market tell you you can dance between the raindrops a bit.
Okay. But again, your big call tonight sounds like north of 13% in the next 10.
And that's the grand scheme of things. Yes, when I take a look at the long-term monthly charts, that's what I see.
Rick, it's always great to have you.
And your easel.
Come by anytime.
Thank you.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce Silver Eagle coin giveaway.
Want to win 500 Silver Eagle coins just like this guy?
Yeah, this is Kevin.
Hi, Kevin. This is Dr. Tyler Wall, CEO of SD Bullion. I'm calling to let you know that you won the SD Bullion giveaway of a monster box of 2022 Silver Eagles.
Unbelievable. That is awesome.
So click the link below for your chance to win.
Good luck to all of you out there who enter our free 500-ounce American Silver Eagle coin giveaway sweepstakes. Stay tuned to the end of this week's SD Bullion Market Update as we have an exciting announcement of exclusive silver and gold bullion product releases coming to SD Bullion with our partner of the Scottsdale Mint. The silver and gold spot price markets sold off to start the week, only to bounce back slightly to close. The spot silver price finished at $21.59 an ounce bid, while the spot gold price closed at $1,833 an ounce bid. The spot gold silver ratio finished the week up again slightly to 85. When we look at where spot prices currently are versus their 200-day moving averages, we can see that gold, silver, and platinum are all currently priced well below their respective moving averages. In bullion bull markets, buying bullion or dollar cost averaging lower during these kinds of spot price dips generally pays off over the long term. CTAs, or commodity trading advisors, mimic unsecured Western world gold ETF sellers, as they currently have some of their lowest positions since 2018, being collectively net short at the moment, sharply. Gold, particularly, is about as oversold as it got in early 2018. Gold followed that spot price dip then with a 75% plus rally in spot price in just over 2 years that followed. Central banks continue to buy gold bullion, often over underperforming long duration bonds, as we've shown today. They admitted that in August of 2023, the sovereign gold bullion buying data illustrates that they bought just over 70 metric tons. About 28 of it went to China. Yet some central banks are already stating that they are moving to buy 10 times more bullion than they did in August 2023, in this month of October into next month 2023. Russia's finance ministry stated it's allocating nearly 400 billion rubles, that's 4 billion in US fiat dollars, to purchase gold bullion between now and the 7th of November 2023. That's a tenfold increase on the US 400 million which the ministry allocated during the last August 2023 to buy gold bullion for the official reserves. Central banks are certainly buying mass gold bullion on this spot price sell-off, as Russia is aiming to be close to a 70 metric ton buyer of bullion alone over this admitted current month-long increase in their allocations. Finally, to close this week, we have a special announcement of a new product line we are launching this coming Monday. Last evening, our SD Bullion CEO and the founder of Scottsdale Mint went on the Bullion Pros channel on YouTube here with Yankee Stacking and Silver Dragons to give further details on the coming product unveiling. The video's full link is in the show notes below, but I'm going to give you a brief highlight here of the coming product series that you can see for yourself. Have a look.
We're really excited to launch what we're calling the Commander series. It's been in development for just over a year now. We wanted to bring something different to market that had some lasting power that people really haven't seen before, and do something in a completely different format and do it with a historical theme that we're going to kind of explain and just kind of roll for the next 4 years with, and focusing on some of the best military leaders, some of the best commanders. And what better person to start with than Napoleon? The guy has more documented victories on the battlefield than anyone else in history. What went from possibly a one-off with some brainstorming over a long lunch turned into something pretty exciting that we have here. So this is you guys are seeing the first unveil here right now. This is actually a new dimension size for Scottsdale Mint as well. If you can see on some of your screenshots there, the size of a traditional 39 millimeter coin. You're seeing our new Cowboys that we launched just a few months ago, which have been incredibly popular and successful. And so you can kind of see the dimension. So that's a 39 millimeter. What you're looking at on Napoleon is a 65 millimeter. And while that doesn't sound like that big of an increase, if you put that coin right on top, the amount of real estate that you're actually doing is quite substantial. So we wanted to produce something that was a little bit different. And this is actually struck a lot differently too. We wanted to look at these commanders and look at their history. Some of these guys, I'd say all of them, are controversial. These guys had a rough past. Maybe not everyone likes them. They were in war. And we wanted to create a product that would apply to the historical figures and more of the modern figures as well. But we wanted something that was imperfect. So it is essentially, it looks like a reverse proof like coin. What we've done is an open strike, which means there's no collar around the coin. So when we're actually striking it, it creates a little bit of a ruptured edge. It's not completely finished exactly how most coins are. And if you're able to show it up, you'll kind of see some of that. And that was intentional on here. But what you do get with it is is the total complete finish that just pops. We got that matte, kind of the matte finish with the top side, the top side of it, and then you've got just a beautiful shiny surface of the detail of the words, and then obviously Napoleon himself. The contrast on it is really unlike anything you'll really see on the market, especially at a bullion price. So while this is not a proof coin, it's pretty darn impressive.
So the edge, I want to bring this up again one more time because I'm just fascinated by this. It's not a reeded edge. That manufacturing there, that edge there is very unique. I've likened it to like an infinity pool. You know what I'm saying? When you go right up to the edge and it looks like you're just going to drop right off. The whole field goes right to the side there. It's really beautiful.
It is a different way of flowing as the pressure of the press, obviously, top and bottom. And this is done on a much different press than normal. It's done on something. There's probably only a few of these in the world, and it's done a lot differently, a lot of precision. If you don't strike enough, or if you strike too much, it completely blows out, and it changes quite a bit. We love to play with doing things a little bit differently and seeing if we can get get the metal to move in different ways. So this one was just another look at how to do it. And again, it's rimless. So we're running, the coin is just running straight out without a rim, which again is something very unique to our sector.
Yeah, I've always thought of Scottsdale Mint as pushing the boundaries, and the innovation is just absolutely insane. And I think this is probably one of the best products you guys have ever come out with. It's absolutely gorgeous. And I'm curious, are you able to talk about the rest of the series? Maybe not exactly how many you're gonna be doing, but can you give us a sneak peek of anything else you have planned for this series?
I'll drop one of the ones that are going to come out. So we're going to do 3 commanders a year for 4 years is how we're set. I'll mention one other that's coming out of the first 3. It's patent. So you're going to see you're going to go from 200 plus years ago here with Napoleon. You're going to move it more into the modern era with general patent. And something also pretty hot, a little sneak peek. The coin series it's gonna run similar. You're gonna get a similar bust, similar look and feel. So this is gonna look like a set once it's all done.
Napoleon will go on sale Monday morning, 10 a.m. Eastern. So this is the first time we've actually went out with something like this, as you guys know, before time to announce it, to say, hey, get ready. And there's a reason for that. We worked really hard on that launch, and it was extremely successful, and we sold way more ounces than anybody could project. There's a poster, there's a movie, and there was just so much excitement around this. And I kind of got this feeling like, hey, this thing's going to go really quick because there's only 4,999 of them. Scottsdale makes the coolest stuff on the market. Everybody knows that. So with that, we thought we'd get out in front of this thing a little bit and say, hey, let's go on. Let's show everybody what's coming, and let's let them know when it's going to come. That way, the people that are super interested can have a chance to participate. On Monday morning, when it goes for sale, that right there, there'll be a bundle. You can buy the coin and the poster together. There's going to be 100 of those made available. So expecting those to go pretty quickly.
Yeah. It's an absolutely beautiful 5-ounce silver coin.
These are exclusive to SD Bullion.
Man, we're just excited, and we can't wait to bring out the future ones. This has been great to be on your guys' channel and to see all the fans and the appreciation for the products that we're bringing to market, and thanks to SD Bullion for putting this together and launching this to the market here on Monday.
That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.